Next week is going to be one of the busiest trading weeks in the entire summer. My name is Blake Morrow. You are listening to the week ahead video for, well, it's July 25th, 2025, but for the week following. And I'm not wrong. Next week, it's going to be one of the busiest trading weeks. We've got so much happening. So I'm here to prepare you for your trading week. So make sure you stick around for this entire video. And it's not only going to be me. I have Nick from Trading Analytix. He's going to be joining us today as well. So let's talk about a few things. First of all, we should probably talk about what happened last week, or what we were talking about last week, because what is happening right now is what we talked about last week. I want to take you over to the gold market really fast, and I'm actually going to take you over to the week ahead charts. But last week we talked about gold, basically approaching this trend line support. You can actually, let's take the look at the charts that I drew on last week. Here's that trend line support, and we talked about if it breaks below this trend line, we're going to get a breakdown. Well, we're actually breaking down right now, and what is happening is you're starting to see the dollar take hold, and you're starting to see the dollar actually break higher, especially against certain currencies. Let me find the dollar index, which is where is it? I don't know. Oh, there it is. Okay. You see the dollar index, which is actually starting to break higher, but what we've seen it do is break higher against a lot of different currencies like the Aussie. The Aussie has been one of the key developments today. We've seen the Aussie just really bleed lower as gold has moved lower. So you're seeing a lot of these developments now take place in the markets that we talked about last week. Remember, last week's title was the resync of the market. So as gold breaks down, the dollar starts to gain some steam. Now, a couple other things I want to talk about. Well, I want to talk about what's happening this next week. And you can follow along via ForexAnalytix. You can follow along in the calendar. You can use the data flash that's right here. All you have to do is just adjust whatever times and dates you want to. But there's so much things, or so much things. So if I like English, obviously can't speak it. There's so many things. It's Friday, guys. It's the end of the day for me. There's still a lot of time left in this market, and a lot of things can happen between now and the time the market closes, by the way. But anyway, there's a lot happening this next week. We have the FOMC, Bank of Canada, Bank of Japan, all rate decisions, where the FOMC is going to be a big one. The Bank of Japan is going to be a big one. Bank of Canada, maybe not so much, but we have the non-farm payroll. We have August 1st trade tariff deadline, and President Trump has been on the wires today talking about all of the different trade deals that are about ready to get done, the letters that are being sent out. So we're going to find out what countries and what countries are going to be dealing with what as far as tariffs go by the middle of next week. We got PCE data coming out and advanced GDP data. Plus we have earnings from so many companies. A couple notable ones are going to be Microsoft, Facebook or Meta, Amazon, and Apple. So a lot of big tech earnings this next week. We're in the thick of it as far as earnings seasons go. Now, before I get into all of that, I do need to mention this. We are fighting inflation our own way with ForexAnalytix. We've actually backed up our prices to 2019 levels. We're giving you a 40% off month-to-month subscription. And once you're grandfathered in, when the sale is off, you keep that price. Probably the most important thing to know about what we do here at ForexAnalytix, wherever you are the lowest price at as far as anytime you get grandfathered in, and as long as you're an active customer, you can get to continue to keep that price. So we have our monthly subscription. Oh, sorry, I'm already subscribed. Imagine that. We have our monthly subscriptions, 40% off. So make sure you take advantage of that. This is the summer sale that we're going to be running for the next couple of weeks. Okay, now with ForexAnalytix, obviously you get this wonderful platform. You get to join us in the chat rooms. Like if you want to have conversations with me, like I was talking with Mark here, MRBH, about being in the Euro Aussie. We happen to be on opposite sides of the trade. We're talking about seasonality that was from Brent Donnelly. We were talking about why we're doing whatever we're doing. in the markets. If you want to have those types of conversations with traders like myself or the rest of the Forex Analytics community or analysts with Forex Analytics, you get the full access, like I said, for 40% off. So make sure you take advantage of that. All right, back to what's happening. What's happening here for the next week? All right, so next week, like I said, we've got the FOMC, the Bank of Canada, BOJ. So I'm going to cover those currency pairs really quick. I'm also going to cover what's happening in some other individual currencies. The S&P, what's happening in gold. We're going to talk a little bit more greater detail what's happening in gold. And I'm going to give you my top 3 setups, trade setups of this week, and I'm going to review the ones from last week. Plus, Nick is going to come in and talk about some of these individual stocks, probably the Mag 7, what's happening in the S&P. I'm going to also talk about some of these companies that are reporting earnings, especially when you look at companies like Apple, which I think are really important because it's such a big part of the S&P makeup, if you will. All right, so let's talk about this next week as far as some of the central bank meetings. I want to go back to the dollar index and kind of focus in on what the Fed is doing and what's happening in the dollar. So going back over to the dollar index, what you're going to notice is longer term, we have this inverted head and shoulder pattern set up. Now we're currently developing the right-hand shoulder, the right shoulder of the inverted head and shoulder pattern. Notice that the head actually comes in at the long-term 14-year trend line, and that is right where the head hit. Now, I believe, and I tell you guys this every week, I believe over time, we're going to get a rally in the dollar, but eventually it's going to break down. I firmly believe that. But this trend line is such a big deal that it makes sense that we're being supported here. And plus, positioning is so bad regarding the dollar. Now, what are we going to learn next week from the Fed? Well, we're going to probably learn that they're not ready to cut rates next week, but they're looking for at least 1, if not 2 rate cuts going into the remainder of the year, with the first one probably to be delivered in September. So that's what most traders are expecting. But how about if the Fed and Fed Chair Powell, which, by the way, he's been extremely defiant. Matter of fact, if you look at some of his comments from earlier, and I'm going to take you back to the Forex Analytics chat room, because these are the types of things that you can find in the chat room. We were discussing a little bit earlier about some of the comments that Fed Chair Powell. I want to read this to you. Powell has told multiple associates and allies that there's no chance he will bow to President Donald Trump's calls for him to resign, vowing to withstand several more months of the president's unprecedented multi-pronged assault over Powell's refusal to lower interest rates. Now, that's via CNN, and obviously that's reports. But if you saw the meeting between the Fed chair and President Trump one-on-one, touring the new Federal Reserve building that's costing $2.5 billion to build, which, I mean, that's got to be a pretty damn nice facility. One would imagine. But anyway, you can see that he is not bowing down to what the Fed chair is doing and what he's saying. So the reason why I say that is because the U.S. economy, you look at like weekly unemployment claims, which is our most real-time data that we're going to get in the jobs market. They slumped below 220,000 this week, like yesterday. It's Friday, so this was yesterday. And, we have inflationary pressures that are probably coming from the tariffs, and you're starting to see it peak up in, several different methodologies. So why would the Fed heat up the economy even more by cutting rates and stoking more inflationary pressures, making the housing market more unattainable by restoking home prices higher? Even if you cut rates to allow in buyers, you're just going to prop prices up again. Why is the Fed going to do that? I mean, if we walk away this next week and the Fed chair just seems very stand pat, wants to keep rates unchanged, see what develops with tariffs, and we walk away thinking, man, I don't know if we're even going to get a rate cut the remainder of this year. you could really see the dollar take off. Now, where the dollar becomes very bullish from a technical point of view is the neckline, which comes in right now at 98.65. Well, by the time we get there, it'd be more like 98.60. And you also notice that there is the 50 DMA just above too, which comes in at the 618 retracement, which is at 98.25. So 98.25, 98.60, those are really key levels to watch this next week during the the FOMC meeting. All right. Now we have the Bank of Canada, which is also going to meet this next week. I believe they're meeting at the exact same day as the Fed. I think it's just earlier. It's going to be on Wednesday. So the thing about the Canadian, I want to point out, is the dollar CAD is nearing a major trend line resistance right now. And if you focus in on the dollar CAD, by the way, and if you're in the chat room, let's just go back to the chat room really quick. Again, if you want to know what I'm doing and you want to know what positions I'm running, you can just go over here and say, where's Blake's open positions? Let's go look here. Where's my last one that I put in? Oh, Blake's open positions. Blake is long Euro Canadian at 160.16. Okay. So I'm already short Canadian currency. So you go to Euro Canadian and I'm long at 160.16. And by the way, this is a bull flag pattern if you guys don't know this, right? So you guys can see why I'm obviously telling you in hindsight why I'm long, but if you wanted to know in real time, July or July 25th, actually I got long July 24th, which would have been yesterday. If you wanted to know all that information, well, you can see a running total of what I'm trading in the markets at all times. So again, that's just one of the benefits of being part of the ForexAnalytix community. Anyway, going back to the Bank of Canada and the dollar CAD, I mean, look how bullish the dollar CAD looks, and how bullish is it going to look if we break above 138? Now let's also take a step back and understand that the market is very bearish and sentiment is extremely bearish the dollar. So what happens if the dollar starts to rally, not only against the Canadian, but what if it starts to rally against the euro or the Aussie or what have you? You can see an extremely explosive move if the Bank of Canada is a little bit more dovish. Now, why would they be dovish? Why would the Bank of Canada be dovish? Why? Because Donald Trump is imposing an aggressive amount of tariffs. He's ripped up the USMCA. And how's that going to affect the Canadian economy? And since you've just seen the Canadian currency appreciate, basically 7% against the dollar over the course of the last, several months, that makes Canadian imports that much more attractive. Then throw on a tariff on top of that. How's that going to impact negatively the Canadian economy? So if you start looking at the dollar Canadian from that point of view, we might have the ability to really rally and have a double bottom, triple bottom range extension take us up to the 200 DMA. That's entirely possible. So you better keep this one on the radar going into next week. Now, I also wanted to mention the Bank of Japan, the BOJ. We've been talking about the BOJ and why it's a big deal. And last week it was actually pretty interesting following the reason why we got a sell-off below support. We were talking about below support, and then we got a move back up again, is because a couple reasons. The U.S. and Japan have put together a trade deal. That's one. That's obviously helped the yen. But then we hear that Ishiba is going to step down, and he's going to lose that leadership role, which means that what I drew here is very realistic. The dollar yen can, in my opinion, make it back up towards 151, 151.70 in the days ahead. But you have to also imagine one of the most aggressively long positions in the market has been long yen, short dollars. You look at CFTC positioning, and that has been one of the lopsided longest positions out there. So many traders have been expecting the dollar yen to break below 140. Well, what happens if some of that unwinds and you see that dollar really start to strengthen? Why could that happen? Well, when you have a leadership regime change, the prime minister, and you don't know who's coming in, that uncertainty unhinges the market. So you might see continued yen weakness. Then compile that with over aggressive dollar shorts, you could see the dollar yen really squeeze higher in the weeks ahead. So watch the dollar yen, and I'm gonna pull this up just because my good friend and also colleague analyst at ForexAnalytix, K-Man, likes to look at Ichimoku clouds. We're well above the cloud, especially when you're looking at the yen. We're well above the cloud right now. And you notice how when we backed up this week, we held above the cloud. We couldn't break back below it. So that holding above the Ichimoku cloud also would argue that this currency pair is probably ready to continue to rally, especially knowing what the dollar could do with the weakness in gold. Now, like I said, there's other data points and things that are going to move the market, like PCE, GDP, and the non-farm payroll on Friday. Just keep in mind that not only do we have all of that, but we also have end of month flows that will be hitting the market midweek next week. So Tuesday, Wednesday, and Thursday, you're going to see all the end of month flows as well. Matter of fact, that brings me to another topic really quick that I wanted to discuss with you guys. If you like these videos and you think they're really great in helping you prepare for the following week, make sure you give me a thumbs up. Subscribe to the channel. It's free to subscribe. It's free to give me a thumbs up, and it's free to jump in the comments below, especially if I miss something. I almost forgot to talk about the end of month flows, but I'm not going to be able to capture everything that's happening this next week. And if you think there's something that's really important that everybody else should know about, please jump in the comments below and let us all know. I'd appreciate it, and I know traders at home would really appreciate it as well. All right, now a few other things that I want to cover, because I covered some currencies, but there's a couple other currencies that I think are a big deal, and one of them happens to be the Aussie dollar. We've been, marking up this long-term trend line, and you notice, and this is one of the big warnings. I went short. You guys can go back to the trades room and see that I was short and closed out my short Aussie dollar for 35 pips. I shorted it above 66 cents yesterday. So why did I do that? Because I was warning everybody, hey, look, every time we hit new highs, we fail. Why is copper, or I just gave you the answer. Why is the Aussie continuing to fail up here, especially when you have copper hitting all-time highs, you have stocks hitting all-time highs, with risk appetite moving the way it is, and then you have Aussie data that's starting to really weaken. That sours, how I feel about the Aussie dollar. And every time that you chase the Aussie higher, you get hurt. That's what happens with this pair. Now, what I would be doing is looking at the Aussie more as a rising channel. So that means, yeah, if the Aussie gets back towards 64.50, 64.70, it's probably a decent long down there. But is it a decent long when you're up at 66 cents? The answer to that question is obviously no, it is not. And again, if you want to have discussions with me and know why I'm taking all these positions, why I'm long the Euro Aussie right now, like this, why I'm long the Euro Aussie the last 2 days, if you want to know why and have conversations with me, jump in the ForexAnalytix chat room. Take advantage of the sale, because the sale is only going to last for a certain period of time. And when we remove it, it's gone. Remember, you can't have it again. So anyway, now I will cover what's happening in gold. I'm going to cover what's happening in copper, because I think that's a big deal. I'm also going to cover what's happening in crude, because that is also a big deal. And I'm going to look at the S&P and some individual stocks. But before I do that, I'm going to turn it over to Nick from Trading Analytics. He's going to cover some of the key markets that he thinks you should be looking at. So enjoy your time with Nick, and make sure you give him a big thumbs up and comment down below on how much you love his analysis. All right, enjoy your time with Nick. I'll see you in a few minutes.
Hello everybody, my name is Nick Groves with Trading Analytics. Blake, thank you as always for passing on over to me. And let's go ahead and talk about this relentless equity market. One of the key developments this week for me was noticing the S&P get up to this multi-year trend line. This trend line dates back to tags in 2021, 2022, 2024, and now recently we are nestled right above it. And it's coming into this territory, near 6,400 in this rising wedge. We'll have to see if this is going to continue, if we can blow through 6,400. We are in a positive gamma environment. The next targets, unfortunately, as you end up in all-time high territory, is whole number hunting. So you begin to look at 6,400, 6,450, and so forth. We're looking at the SPX right now, but simple, pullback extensions. You do have a 261% at 6,428, and above there, there's likely some protection around that 6,500 level. But unfortunately, this positive gamma environment continues to push on, and traders aren't getting those pullbacks that they might be itching for. One of the big things that we need to talk about coming into next week is earnings. There are a lot of earnings, specifically in big tech, that are going to definitely move this market. You have earnings with Microsoft and Meta on Wednesday. These two specifically, I'm excited to see, particularly Microsoft, because of how relentless Microsoft has been. Just take a look at this chart here of Microsoft as it just continues to squeeze. Let's get to a 2-hour here. What a run Microsoft has been on. This is an absolute squeeze, and the difficult thing about squeezes is that they can continue and continue. That saying, the market can remain irrational longer than you can remain solvent, certainly rings true in this chart right here. But it's not just Microsoft and Meta. On Thursday, we also have Apple and Amazon. So, out of the big tech stocks, the only one left will be, I believe, let's see, NVIDIA. So, because we just had Tesla earnings, we'll go and take a look at Tesla. Tesla on those earnings definitely slumped. I think it was down 9% yesterday, getting a slight pop back up, 4.47% on the day. But I did notice that it came up right near that 618 retracement, the 618. So we'll see if this covers resistance, but basically what I'm getting at is we're coming into an earnings season that's really going to shift this market's tone. It's been on such a leap higher that will earnings provide an opportunity for pullbacks? One thing I was looking at is this Goldman's earnings sentiment. We are so high as far as sentiment to the upside. People have definitely been piling in. I'm noticing a lot of, purchases in leveraged markets. So we'll have to see if people end up disappointed or if they end up correct, because this surge higher certainly suggests that earnings are going to be good. But like all big data, let's get to the SPX here. Like all big data, the market does tend to regress ahead of big events like that. So I would not be surprised to see the S&P hovering back near 6350 or so ahead of earnings. And one other thing that I cannot keep off my mind is taking a look at the VIX seasonal. The VIX does tend to wake up as we head into the fall months. You'll notice August, September, and October all have pretty high months for the VIX on average. So will it begin to pick up, and can big tech earnings actually kick off that fall season where we tend to see some equity weakness? I'm definitely optimistic about it. Another thing that everyone's been optimistic on is crypto. Bitcoin has been relentless as it hit an all-time high around 123. It's trading sideways at the moment, but one thing I wanted to leave you guys with is take a look at this weekly chart of Bitcoin. You have the beginning of the trend line in 2017, a tag in 2021, and now a final tag up here. Will this trend line offer these big pullbacks that it has in the past? We'll definitely be covering that here at Trading Analytix. If you're looking for more information, please give us a follow in the description below. And have a great weekend. Thank you so much. Cheers.
All right, thanks Nick for the update. And I know traders always love to see your updates. I always watch Nick's after the fact because I know he's filming right around the same time I'm filming. So I'm not sure exactly what he covered, but I'm going to cover some things for you guys as well. That I told you I wanted to cover. I'm going to give you my view of the S&P. And by the way, I'm going to spend a lot of time on the S&P today, because it is going to be one of the trade setups going into this next week. All right, so I'm not going to give away too much here, but you'll notice that S&P, I guess I just want to point out that we just continue to grind higher following the wall of worry, or climbing the wall of worry, excuse me. But there's something that's happening this week that I think is going to alter what is happening in the stock market, and that happens to be in the middle of the week this week. Around August 1st, we're gonna know if there's been a trade deal done with China, if there's been a trade deal done with Europe. And by the way, those are the two big ones that the market really just all in all cares about, because we already got Japan, we already got the UK. So what's happening with the Eurozone? What's happening with China? All right. And so therefore, if you look at, the longer term developments of the S&P, remember, we've been talking about a wave 5 reaching this 127% extension. All right. That's going to come into play this next week. And I'm going to tell you how I'm going to trade it during my top 3 trades at the very end of this video. So make sure you stick around for that. All right. Now, I also want to cover what's happening in copper, because copper, in case you missed it, I blogged about it a week and a half ago that we were basing and we were about ready to take off again. And copper took off and hit a new all-time high. But notice how we hit a new all-time high and now we're selling off. Now we're starting to reverse from hitting a new high. And that was this right here is a divergent relative strength. See how relative strength basically matched those highs? Well, actually, that is slightly a new high. I might have to take back what I just said. We hit a new high in price, and that was actually a new high in relative strength, very so slightly. But regardless, this could end up being a false breakout. Now, what I would be more worried about at this point in time is if copper breaks below 533. Because if you go back longer term and you see this old previous rising trend line that could, you could probably just do it like this in copper. You get back below this 533 level, I think that's where copper actually turns bearish. So if you're long copper, that's where I'd be mostly concerned. Now, I also said I wanted to talk about crude oil. The reason why I want to talk about crude oil is because we've been discussing this bear flag pattern, or this ABCD, right? And we've been talking about it. Now we're not very far from $64. Now, I know this. What happens when you're in the market and you own something, whether it's whether it's crude oil, whether it's S&P futures, whether it's the euro dollar, doesn't matter, whatever interest or whatever market you're trading. If a long enough period passes and you're not making money, you start to be very hesitant in what you're holding. So in this case, if you've been a buyer of crude oil ever since we spiked down to $64 and you're like, it's going to get back above the 200 DMA, and eventually when it gets back above the 200 DMA, we're going to rally back to the 70s. Why? Because risk appetite continues to go up, stocks continue to go up, the economy looks good, so let's be long crude from a reflationary trade standpoint. If that trade's not working, eventually you're going to get frustrated and you're going to get out. And what we see from a technical point of view is crude oil can't even get back above the 200 DMA. It can't get back above flag resistance. And as a result, the risk is building for a move down in crude. And so that is what I'm going to be looking for in crude. If we break through $64, I think it's a one-way ticket below 60. So, because if you look at just from a ABCD point of view, this is what it would look like. That would take us right back to $55. ABCD. So be on the lookout. Crude's trading on its lows on the session right now on a Friday, which makes sense to me. But you can see crude's trading on its lows right now. If this breaks down, it's gonna be ugly, especially if we break $64. Like I said, I wanted to cover some other things really quick, as I wanted to cover some of the stocks that are some of the companies, that are reporting. One of them being Apple, because if you look at Apple has been one of the bigger underperformers of the market. Let me get rid of this. Because it broke out a couple weeks back. But notice how we can't even get above the 50% retracement. So what happens to a company that can't rally when the rest of the market's rallying? Well, I look at it like let me get this for you. I'm gonna give you I'm gonna show you the way I view this. When you have a company or a stock that, the market's rallying, but a big company like Apple, the stock is not rallying, it's kind of like, in this case, and I'm going to draw it out for you, it's kind of like when you drop a ball and it hits a table and then it bounces and it doesn't bounce very far. Then we're going to bounce, and then eventually we're going to fall off the table. So if you take like a ball, that doesn't work because that's green. Because you can't see that because of my green screen. So let's use a rock, right? My son made this for me about 12 years ago. It says, "Rar, I love you." Yeah, it's for my son. Anyway, you see a ball bounce, or hits the table, right? Hits the table. Bounces are smaller and then eventually rolls off the other end. That's what I'm trying to illustrate with you with Apple. Because if Apple can't bounce and it can't break out, the risk is now building for the downside. Now remember, Apple's got a very mature product line and ecosystem. They're not doing anything innovative anymore. Ever since Steve Jobs passed away, innovation's gone out the door. Now Apple's more like a electric company. That's what it's become. So be careful with Apple because it's so widely owned. If we start to roll over again, it's going to have a lasting impact in the markets. Also, Amazon reports this next week, and Amazon has been very strong. But the problem that I'm going to have with Amazon is if we can't break out to the upside, then we start creating what we would call is a higher low. And when we create a higher low, if we can't break out to the upside, then if that doesn't happen, then a higher low means that might be a shift in trend longer term, where then we would start putting in, lower lows. So keep your eye on Amazon because it's either make it or break it for this company this next week. We also have Microsoft. Microsoft is another one of those legacy companies that's done really well. It's done really well because of, let me go ahead and just put it in here. It's done really well because a lot of people believe that Microsoft is going to play catch up with AI. But here's the thing about Microsoft. We have a really big rising channel and we're at channel resistance right now. So what happens if Microsoft rolls over from these levels? That is a big risk that I believe is developing with Microsoft. So we are at a huge inflection point in Microsoft. So keep your eye on those three individual companies. I know we have Meta as well, but all of these big tech companies are going to be big movers going into the next week. Now, how do you as a trader take advantage of all this? Well, you get into the trader funding program, and the trader funding program is a part of our business that allows traders to get access to capital. If you don't have capital to trade or you just don't want to risk your own money, you got to check out the trader funding program. There's two different assessments that you can do. You can actually do you can get immediate funding, or you can take a one-step assessment, which is the more economical approach to getting funded. So sit back, watch this 2-minute video on the two different types of funding programs, and I'll see you when it's over. Are you looking to get funded as a trader? Why would you want to get funded? Well, the markets are extremely volatile. There's a lot of great opportunities, but because of the volatility, you don't want to risk your own money. You'd rather risk somebody else's money. That's why traders get funded. At Trader Funding Program, we have two different options that you can choose from. One, instant funding. That means immediately you can access up to $100,000 in capital. Now, by doing that, you have risk parameters you have to follow. You can't lose more than 8% on a trailing basis. That means as you're making money, you can't lose more than 8%. You also can't lose more than 5% intraday because we want to make sure you can control your risk. That is your instant funding program option for you. But let's say you wanted to take a more economical approach. You can access up to $1 million with the one-step assessment. Now, the one-step assessment, that means that You can't risk more than 6% of your high water mark to pass your assessment. That means as you're trading a demo account, as you make money, you can't lose more than 6% with an unlimited amount of time. Once again, you can't lose more than 5% intraday because we want to make sure you can control your own risk. Now, with either option, you have the ability to keep up to 90% of the capital that you make, 90% of your returns. That's pretty awesome. You know what else is great? With either one of those options, you get included in the ForexAnalytix community for a certain period of time. The ForexAnalytix system does analysis on 30 different instruments, everything from currencies to gold to indices, and it gives you different trade ideas, analysis, live squawk feed, so you're up to date on news, you have risk management tools, everything that you would need as a trader in your toolbox to help you become successful. But more than that is you're included in the ForexAnalytix community, the private chat rooms where you have access to me and other analysts from ForexAnalytix. Imagine being able to see what I'm trading, to be able to talk to me and other analysts and other traders and see what they're doing and ask questions. Why trade alone when you don't have to? You should utilize a company like Trader Funding Program for your funding needs. So check out Trader Funding Program for more information. I'll see you soon. You know, one of the best things about being part of the Trader Funding Program is you are automatically included in the ForexAnalytix community. Now, why do we do that? Well, we do it because we want you to succeed. You know, obviously, it's you know, if you're going through this process, why would you want to do it alone? And if you can do it with another group of traders, with a big group of traders, and be able to chat with me, you can chat with Ryan, you can chat with K-Man. Well, actually, you can't chat with Ryan next week because he's on holiday. You can. This is Ryan in his holiday mode right now. You know, if you want to chat with Michael Brown from Pepperstone, he's in our chat room. Or so many great traders like Wuju, Steven. There's Glenn. You know, I'll just start rattling off names of different traders that are Mark, Gavin, Adam. You know, all these, and this is a Friday afternoon. I mean, there's so many great traders in our chat room. Why wouldn't you want to be surrounded by other traders while you're going through this process? So take advantage of the Trader Funding Program. Be inside of our community so we can give you trade ideas, things that you can be thinking about. You can bounce your ideas off of different people as well. We just want you to succeed because obviously it's good for you and it's also good for our company and what we do. All right, so let's get into this is the time that I want to get into the top 3 trades of this next week, but I also want to review the 3 trades from last week. So let's review the first setup from last week. Last week we talked about, first one was short S&P while below 6320. Because I said that, you know, I think we're going to hit this 261% extension and reject it. So, you know, this was Monday. So if you shorted it on Monday, you got short, you're on the right side for a couple of days, but then eventually, you know, all these trade deals coming through, we broke out. So if you look from, you know, today to last Friday to today, this trade did not work out. But if you did it on Monday and you managed to make some money on the first couple of days, it worked out. But for purposes of this show, I do not count it as working out because from week to week, it didn't. But so I'm going to say that one didn't work. But it did for a couple of days. So depending on how you traded it, you may have made money. Okay, that was trade setup number 1. Trade setup number 2 was short the euro below 1560 or buy it above 117. Well, break below 115.50 or buy it above 117. And actually what we ended up doing is ended up breaking out at 116.75. So did you make money on the breakout? Absolutely. All right, now I'd be careful with the euro up here. I'm just saying, but just based on what I gave, the information I gave you on the dollar, or the analysis I gave you on the dollar just a few minutes ago. But did this trade work? It sure did. So we had one that didn't work, one that did work. Okay, so now the third trade setup from last week was short the dollar yen at the 618 retracement at 5170s because I was thinking, you know, that Ishiba was going to lose his majority, which he did, but I thought it was going to have a much bigger impact, and I thought we were going to rally up to 151.67. We didn't. So therefore, that trade just didn't happen. And we talk about this all the time. You plan for a trade and you trade your plan. Sometimes the plan just doesn't unfold. And this was a case where we never got to 151.70 to short, so it just didn't happen. So we had one trade that worked, one trade that didn't, and one trade that just didn't take place. All right, I mean, that's trading, right? I mean, you know, if you look over the last 8 years, here's our patterns in play in ForexAnalytix. You can see we have 9 patterns in play happening right now. But if you look at the closed patterns in play, and you look at the total number of returns, but more importantly, winning percentage, we win, and this is 8 years, 8.5 years worth of data. You can go through all of them, every one of them, 208 pages of them. Go ahead, feel free. We've recorded every single one. So we win 53% of the time and we lose 46% of the time. Well, that's 50-50. Right? So, I mean, you know, if you're talking about, you know, the trade setups that I just gave you, 50-50. But what makes the difference and why it works for longevity of traders is risk management, which actually brings me to another thing that I wanted to mention to you. On August 7th, now I know some of you might be saying, hey, Blake, I'm not going to be home on August 7th. I'm going to be in a different country. I'm going to be on holiday. Doesn't matter, because on August 7th, we will be having a risk management webinar with myself, Ryan, K-Man, Stelios, Steve, Leandro, Nick from Trading Analytix that you just saw, and I think Andre is going to be there as well, and Dale, Coach Dale Pinkert. We're going to talk about risk management on August 7th. You are cordially invited to this show. It's only exclusive to traders in our newsletter. So if you go right to our website, right to the middle of our website, ForexAnalytix.com, you click here to learn more about trading analytics. You put in your name and email address. You will then get from the newsletter the link to join the August 7th risk management show, but only if you're on our newsletter, because that's where your login details will be. So now, a couple of reasons why you need to put your name in this list anyway, because you're going to be notified about what we're doing with Trading Analytics, and you're going to be one of the first to know. Also, we are slowly leaking out different features we are adding to Trading Analytics in our newsletters. Plus, you're going to be in a sweepstakes for a giveaway. This month, we are giving away 2 Trader Funding Program assessments to 2 lucky winners. So make sure you sign up for our newsletter. All right? Okay. And this way you can be on the risk management show with us, because as I just was explained to you, with the closed patterns in play, the active patterns in play, longevity in the markets has everything to do with risk management. If you cannot manage your risk in the markets, you will not have longevity in the markets. You, as a trader, want to trade in these markets for the remainder of your life. In order to do that, you have to have good risk management skills. As I just showed you, most traders take losses 50% of the time, maybe 40 if they're really good, maybe 55% of the time, but you can still make money if you follow proper risk management skills. So why not learn from traders that have owned their own brokerage firms or have been traders on the exchange floors, or have been on deal desks in banks across the globe for decades on end? Why not learn from traders that have experience about risk management? So make sure you're on that show. Mark your calendars, August 7th. Okay? All right, now this is the time that I'm going to give you my top 3 trade setups for next week. So now I'm going back to the S&P, guys. I am going back to the S&P. You coming with me? I'm looking to sell the S&P at wave 5 at the 127% extension, which actually comes in a little bit lower than what that is showing. It comes in at 65, I believe 65.22, 65.25. So I'm looking to sell the 127% extension, wave 5 in the S&P. I'm looking for a short. Why can we get up there? Well, when August 1st rolls around and China has announced that there's been a trade deal, or they're going to get tariffed a certain amount, Europe, there's a trade deal, and the market finally says, hey, the uncertainty is over. We know where the trade, we know what the trade deals entail. That is the period where I think we get a spike up into the market and you get to sell into it, which will give us a reversal. So I am looking to sell the S&P at the 65.25 level or the 127% extension. That's trade setup number 1. Trade setup number 2 is I want to short sterling. Now, I haven't talked about sterling, but I'm going to talk about it right now. I want to short it on a break below here, which we talked about before. Didn't want to do that. We talked about it before. It's a 38% retracement, but more importantly is now we're developing what Bubble Boy in our chat room just said to me just actually a few minutes before we started. He said this to me. I have to go back what Bubble Boy was talking to me about. I have to go. I'm trying to think what. Oh, here we go. He said that's about as clean as they come, that head and shoulder pattern, which probably means that there's 0% chance that it will play out. Ha ha ha. And I said ha ha ha, true, just as sarcasm. But really, I am looking to short sterling below these lows. We get below the 133, 60, 50 level. I am looking for a short. All right. I think it's about as Bubble Boy is right. It's about as clean as they come, and I want that to be one of our trades for this next week. The third trade, and this should not be a surprise to you because I'm already long. It's the Euro Swiss, and I'm looking for a long-term Euro Swiss reversal. I would be adding to this move above the 93.65 level. And if we get above that, we're looking for a breakout to the upside, following Europe's a European trade deal. Now, the question that you might have is, why do I want to be long the Euro Swiss? Well, if you were watching on YouTube or watching on Twitter, you would have seen my video from a couple of days ago. Remember, I'm Pipzar, so just find our handle or ForexAnalytix, and you can actually watch that 3-minute video on the Euro Swiss. I outline why it could be the best trade of the second half of 2025. So there's your trigger point. That's what I wanted to give to you guys today. And I want to say, whew, thank goodness it is Friday. And if you've enjoyed this video and you've enjoyed your time with me, thumbs up, subscribe to the channel below, type a comment if there's anything that I might have missed. And I want to say thank you so much for spending your time with me. I know the weekends are your time. And for you to spend your time with myself and Nick watching this video, I just want to say thank you. It means a lot to me, and I know it means a lot to our staff here at ForexAnalytix. So you guys and gals have a great remainder of your weekend. I will catch you Monday morning on our free F.A.C.E show that we broadcast all throughout the week. It's free, and I'll see you there. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.